Hi everybody, Lynn B again with the OWA Live. Good to be with you again today. Today's topic is bonds, or sometimes they're referred to as fixed income investments. Just a quick kind of an update on what to expect, what's going on with bonds. You know, we had a bull market in bonds where until about the mid 80s, late 80s, bonds were increasing in value and yield. That's the big term with bonds, is yield. And in the 80s, mid 80s, late 80s, they kind of peaked out. They were still up there pretty good in the 90s, but since then there's been a steady trend, and in fact you'll see a chart attached to this OWA Live about the bond yields. And here we are in the 2021, right? And where are bond yields? And especially over the last couple of weeks, we were thinking that bond yields would stay around 2 on that track, the typical bond index that we look at, but they've fallen below 2. And in fact, they've fallen down into that 1.25, 1.35 area, which means we're getting very little return on bonds. Why? Some of it's COVID related, some of it's people putting lots of money into Treasury, some of it is just the declining inflation concerns, and there's just a lot of variables about bonds and pricing of bonds. Most people use bonds to lower the risk exposure in their investment pool. Let me share with you another idea on how to lower your investment risk with a product called a multi-year guaranteed annuity. Now, before I jump into that, I just want to resolve. Bonds are a tool, just like everything else. Proper application, proper timing, duration, how long does a bond last, what's the purpose? All of those factors need to be reviewed with your financial advisor. I'm not saying bonds are bad, just understand the returns on them right now are in a bear market. The bull market ended in the late 80s, and now we're here, and I'm afraid we're going to be here for a while. For a while, I mean 3-5 years or more. So just pay attention to that. And what's the alternative again? I just said multi-year guaranteed annuity. So let me write that down here on the whiteboard. Since I love drawing, as you know, I love drawing on the whiteboard. M-Y-G-A, okay? And what a multi-year guaranteed annuity is, it gives us a guarantee of anywhere from 1 year up to, we do sometimes a 3-year, and sometimes we'll do a 5-year, okay? And these function that when we put money in here, typically the minimum investment is about $10,000. The 1-year multi-year guaranteed annuity is paying about 1.25% interest on that 1-year product, okay? The 3-year, we're gonna get about a 2.4% interest per year, okay? And the 5-year, we're having a lot of interest in that right now because it's paying 3% right now. Those rates change regularly, but currently we have 3% available with one of our carriers that we use. As you know, we have access to all the carriers out there. We're an independent fiduciary firm. So 3% is what we can get on a guaranteed per year contract. Now, one of the neat things about this particular carrier is that after 30 days, if you want, you can withdraw your interest. We have a lot of clients that are taking money out of banks and out of non-performing bonds and just saying, look, I got to get some growth on this money. So the 3% per year, and then the ability after 30 days to withdraw interest, it's a great resource. As always, if this can be helpful to you in your portfolio, give us a call. And we look forward to our next session. Take care.